And this is Bloomberg Technology. Coming up in the next hour, the state of Apple suppliers are once again in focus after Nikkei reported Apple plans to cut orders for components by a whopping 20%. We will discuss the changing state of the Apple supply chain. Plus, Facebook's COO, Sheryl Sandberg, has been asked to testify in Europe. We will speak to a former Facebook executive turned whistleblower who believes more data scandals are to come. And it is a cautionary tale that caught the attention of every startup and investor in Silicon Valley. We will talk to Pulitzer Prize-winning journalist John Carreyrou, who blew the whistle on Elizabeth Holmes and Theranos. But first, to our top story. Apple suppliers once again feeling the pressure after a new report that the tech giant has warned suppliers of a drop of around 20% in new iPhone component orders. Meantime, Foxconn raised $4.3 billion in its IPO. Its success is a thumbs up for group boss Terry Gou and his aim to nurture a so-called smart factory division and help the wider company rely less on making devices for Apple. Bloomberg's Tom McKenzie filed this report from Beijing.
Foxconn Industrial soared by the maximum 44% in Shanghai on its opening day, becoming the largest tech company listed in mainland China. The business is now more valuable than eBay with a market cap of over $60 billion US. Foxconn says it's focused on robotics, wireless technology and cloud computing, with clients including Amazon, Dell and Cisco. Up to 30% of its revenue comes from Apple alone. The company's strategic investor list reads like a who's who of China's top firms, including Alibaba, Tencent and Baidu. State-owned companies also took a large slice of the pre-IPO pie. They're betting on Foxconn Industrial being the linchpin in China's new smart economy. Tom McKenzie, Bloomberg, Beijing.
Here now to discuss the global supply chain for Apple and the Foxconn IPO, we're joined by Bloomberg Tech's Ian King, and we also have Garrett DeVink with us. Garrett, I want to start with you. You've got an Apple analyst, Dan Ives at GBA Research, who says this report is just noise. Should we be skeptical?
Yeah, I think it's definitely worth treating the report out of Japan this morning with a hefty grain of salt. You know, we see reports about the supply chain all the time. Apple has hundreds of suppliers. It's unclear exactly which components were referred to in this report, but of course it's something, you know, we should take seriously. The market has dinged Apple about a percentage, so you can kind of see how investors are reacting. Obviously, on the supplier chain side, there have been deeper impacts, but in terms of what to expect from Apple the rest of the year for sales, I don't think that you can read this as concrete evidence that it will be as negative as this report suggests.
Now, Ian, Broadcom reported earnings, and you were listening in, and every question on the call was some version of what's really going on with Apple. You know, what did you figure out from that call?
Yeah, I mean, we're back on this roller coaster that we've been on for I don't know how many years now, of trying to guess how much Apple is ordering to try to make that a forward spin into how many iPhones do they think they can sell. What Broadcom really told us was Apple's really been getting rid of a lot of inventory, and that means that the devices they have out there now, whether it's the 10 or whether it's one of the 2.8 devices, haven't really sold to the level of expectations that they once had. However, we're already into the new cycle, which is whatever device comes next, they're already preparing for that, so orders are improving. Whether they're improving relative to massive expectations, although expectations, hard to say. What Broadcom said was about normal, which is kind of cautious.
So I spoke with Apple CEO Tim Cook ahead of the last earnings call. I asked him specifically about iPhone 10 sales. Everybody is concerned about them. Here's what he said to me. It was the most popular iPhone every week in the quarter. It is the first time since we split the line between the 6 and 6 Plus, the first time since then that the top iPhone has been the best-selling. I think that is an incredible result if you think about it. So, you know, Garrett, this is obviously coming from Apple. You know, we still saw a great quarter. Is it really that concerning.
Yeah, I mean,
if they're cutting
Apple is still
orders by 20%.
Apple is still a juggernaut, of course. It's interesting, that quote from Tim Cook. I mean, he's sort of, it's a bit of a he has his way with words there, where the more expensive one was selling more. Those aren't absolute numbers. Maybe they're both selling really poorly. Of course, the Apple quarter we could speaks for itself. And I think the context is very important here. That the fact is the sales of high-end smartphones are not growing across the world in the way that they have been in the last 4, 5, 6 years. And that's something that the market knows. That's something that investors and analysts knows. That's something that Apple and its suppliers know. And it also leads us into the Foxconn IPO and part of what they're doing there.
Talk to us about the Foxconn IPO, Garrett. I know you've been covering this. What does this mean? This is a company that's been trying to diversify away from Apple, and yet Apple remains a huge customer.
It shows the interest in China for having access to this asset. At the end of the day, this is not the first time Foxconn has talked about or tried to diversify away from Apple. And to be fair, they do have other customers. They make hardware for Amazon. They make hardware for HP. They are very good at this, and they make hardware for the best manufacturers in the world. Whether or not this is sort of some sea change that will, magically get them to not be pinned to the fate of Apple, there's a lot more skepticism around that. But it does show, just the institutional investor interest on the Chinese side, the state-owned interest on the Chinese side, and the fact that the stock jumped up so much in its initial offering, although they did price a little bit lower than, maybe where most people were expecting them to. So take that 43% jump again with a grain of salt. It's still a juggernaut of manufacturing.
Now, I do have a chart here that shows iPhone revenue growth in our GTV library. It shows how it dipped, and now the iPhone has returned to growth. Ian, walk us through some of the other suppliers who are essentially at the whim of these numbers.
Yeah, I mean, we saw some news that our colleagues broke today about Dialog Semiconductor, company whose fortunes have been on an absolute roller coaster because of their relationship. Are they in with Apple? Are they really in with Apple? Are they out with Apple? And it looks today, according to the news we broke, that they've had to go out there and try and find another partner to get into more businesses, and that they're going to buy Synapses. So this is a knife edge that a lot of these single source kind of heavily concentrated companies are on, and even bigger ones that are more diversified like Qualcomm have been hurt pretty badly when that relationship with Apple sours.
Garrett, walk us through the plan that Foxconn has to diversify. Other companies have done it. Other companies are not so well diversified. How does Foxconn expect to do this?
So what they IPO'd here was a unit called Han Hai Precision Manufacturing. So that's what they would call their smart factory unit, using sort of advanced manufacturing techniques, using a lot of robotics, trying to sort of pull more and more people out of the process, make it more efficient, and also manufacture higher end, higher margin devices. The Apple iPhone is obviously the prime kind of high margin device that the company already manufactures. There's obviously electronics is continuing to grow. It's not going away. There's a lot of new things out there to manufacture. There's a lot of companies that are coming up that they can reach out to. China, of course, is a place where a lot of this innovation is coming from, whether it's in computing for Bitcoin and the blockchain and kind of walking into that world, or more traditional hardware manufacturing. The smartphone is not going away, of course. But in terms of solid details of what that means, how smart manufacturing is different from traditional manufacturing, it's obviously there's an element of branding and marketing involved here. And so like I said earlier, the interest in this unit is strong. People want in. They're very interested in the business. But in terms of a sea change, we've yet to see that.
All right, Garrett DeVink in New York, Ian King with me here in the studio. Thank you both. We'll continue to follow. Now to a story we are watching. There is a new CEO at one of the biggest wireless companies in the United States. Verizon has promoted its Executive Vice President and Chief Technology Officer, Hans Vestberg. He'll replace Lowell McAdam on August 1st. McAdam has been Verizon's CEO for almost 7 years. He will remain Executive Chairman through the end of the year and non-executive chair after that. Coming up, he is one of the earliest crypto entrepreneurs. Our conversation with ShapeShift CEO Eric Voorhees. What he has to say about the potential government regulation coming to the crypto market next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. It has been quite a year for cryptocurrencies, and that's not really a good thing. The largest player in the game, Bitcoin, continues to fall from December highs. Chances of it rebounding in the near future seem far from reality. Our Caroline Hyde sat down earlier with one of the currency's earliest investors and asked all about the industry. Take a listen. She joins us now from London.
Yeah, Emily, great to see you. And of course, that's right. One of the longest standing Bitcoin advocates is none other than Eric Voorhees. He is CEO of ShapeShift. His company provides instant cryptocurrency conversion, trading one type for digital asset for another. He's been an original builder, though, and an entrepreneur in Bitcoin since all the way back in 2011. I started my conversation by asking him, well, how he sees the crypto landscape building at the moment.
I've been involved since Bitcoin was about $5, and it was the only coin, the only asset. The concept of blockchains was like not that talked about, and we spent a lot of time daydreaming about a day when, you know, global corporations and governments would be paying heavy attention to this because it was getting so big, and it's happening. It's taking over the world in some ways, and it goes in fits and starts, but I think people are starting to really pay attention to it.
For good or bad, you're a man who I know can get quite passionate about the subject of regulation, and you've not always thought they do it in the best possible way.
Yeah, that's one way to put it. I generally think that most regulation is superfluous at best, and a lot of it is quite harmful. Generally, especially in the realm of finance, I think money itself is really in need of being let loose and freed from government control. It is, in a market-based economy, having the primary good, which is money, be centrally planned, I think is very problematic. And no one would tolerate a monopoly in the manufacturing of shoes or cars or cell phones, and yet they do tolerate it in the realm of money. And so people in crypto basically want to offer alternatives.
So let's first of all dig into the way you think the utopia, therefore, is for crypto. I mean, will central banks and governments just not play a role within what eventually will be money, but in a digital sense?
Yeah, I mean, crypto is not a panacea. It does not bring a utopia, but I think what it does do is finally bring competition into the realm of money, and it allows people to actually innovate in financial systems in a way that has never been able to be done before. So for that reason, it's really important, and even if someone doesn't buy into whether Bitcoin will take over fiat currencies like dollars, most people should at least be interested in the fact that competition is now happening. That's generally seen as a good thing.
And will Bitcoin remain the dominant player within this crypto asset, crypto currency space as it is at the moment, or will we have room for many?
Well, it's become an asset class. Bitcoin is definitely the biggest. Ethereum is the second biggest. I don't know which one we will be talking about most 5 or 10 years from now. But the important point is just that these things can compete now. And I think it's been really exciting to see all the innovation happening. There are a lot of projects in the space. A lot of them are garbage. A lot of them are well-intentioned but will fail. And then some of them are actually going to end up changing the world.
Now, this is why the regulators, perhaps to a certain extent, have wanted to cast an eye on this space, is because of the garbage. It's because that people are losing their money. Those that shouldn't be losing their money are falling for scams and cheats within the space. So do you think it needs regulation from a certain perspective, and how?
I don't think it does. Largely what regulators should focus on is preventing fraud and theft. You don't need all the thousands of pages of regulations to prevent fraud. If someone commits fraud, you should go arrest them and then prosecute them for fraud. Most of the regulations have nothing to do with fraud or theft. They have to do with controlling the behavior of consenting adults. And some of that is, I think, highly problematic. I think if you believe in individual liberty, if you believe in free markets, adults who are not cheating each other should be permitted to interact economically in whatever way the two of them see fit. And most regulations simply get in the way of that. And
you've talked about New York, for example, the licensing there. Do you feel it stifles innovation in some way?
Yeah, I mean, I don't think it's just my feeling at this point. New York issued the BIT license 4 years ago, and essentially crypto innovation in New York has completely died. Most of the crypto companies that were there left New York, and now the biggest thing that happens in crypto in New York is the conference called Consensus each year. Most of the crypto innovation is happening elsewhere, and that was largely due to that one piece of legislation. And then the guy who implemented it, Ben Losky, he left the New York Department of Financial Services and got a job helping to consult companies that are trying to navigate the regulations that he imposed. So there's a lot of cronyism going on, and I think a lot of people have been pretty fed up with it.
Let's talk about innovation. Let's talk about your innovation. Let's talk about ShapeShift, because what does it want to become? At the moment, it's a medium of exchange of crypto assets, but you're building on top of that, fixing other problems to be solved within the ecosystem.
Yeah, technically, ShapeShift is a market maker. People think of us as an exchange, but basically, you come to us if you have Bitcoin and you want to trade it for Ethereum or Litecoin for Dash, for example. And we built a way to do that much more safely and much more quickly than how it had been done before. We don't hold any customer funds, and this is really important. Most people are aware of the Mt. Gox fiasco and the exchanges that have been hacked. ShapeShift is a system that actually protects consumers by building technology that allows them to do what they want to do without holding high amounts of risk. And so they do that via initially putting Ether in. Is this how it's powered? If I'm not using money and I'm not actually needing to own the assets themselves, I'm somehow doing it virtually by you. Yeah, you can think of it like a vending machine. Instead of putting in a coin, you put in a crypto asset. Instead of giving out a candy bar, you get another crypto asset. Okay. We hold an inventory of all these things, and so we sell them directly to the customers. What we don't do is hold an account with all the funds of all these people. So in that way, we're very different than a traditional exchange. And I've got to ask you about ShapeShift, because you've raised money. You've raised money from significant players within the space: Lakestar, Pantera, Blockchain Capital. You raised 10 million in what was your Series A. Why did you decide to sell equity? Why did you go for money? Why didn't you do an ICO, as it's called, initial coin offering? Yeah, I mean, largely we put that round together back in the fall of 2016, and we wanted to bring in some more institutional expertise. We wanted to have a formal board with, people that knew what they were doing, that had built businesses, because that will help us build our own. ICOs are great for raising a lot of money quickly, but you don't get the expertise of the people that you're partnering with. So that was a large part of it, and also a large part of it was ICOs had not become nearly as popular when we were actually putting that together. And when did you do one next? Well, I mean, I won't say we haven't thought of it, but it's in the US at least, it's really problematic from a regulatory perspective, because the SEC has not been clear on which tokens are securities and which are not. And they have claimed that they are clear about it, but you go to any of the major law firms in the US and ask them to do a legal analysis of a token, whether it's a security or not, and they will not even be able to do the review. They refuse to even do the analysis. So the SEC has cast a huge pall over the whole industry, and no one really knows where they're going to draw that line. And it's something that has to get fixed. A wide-ranging conversation with ShapeShift CEO Eric Voorhees. Emily.
All right, Caroline Hyde in London for us. Thank you so much, Caroline. Coming up, big tech firms have been pushing diversity initiatives for years, but the numbers, not much of a change. We will take a deeper look at the most recent diversity statistics next. This is Bloomberg. A story we are watching: the payments giant controlled by Chinese billionaire Jack Ma has raised about $14 billion in its latest funding round. Ant Financial, said to be valued at $150 billion. Investors in the latest round included Singapore's Sovereign Wealth Fund, Warburg Pincus, and Silver Lake. Well, early this week, we saw Alphabet shareholders vote down a proposal to tie executive pay to progress on workplace diversity. It's a problem we continue to discuss: gender pay gaps and diversity in the workplace. Tech companies know they have a problem, but their efforts to address it have so far yielded little. In terms of race, among 8 of the largest U.S. tech companies, a portion of black workers in technical jobs rose to 3.1% in 2017 from 2.5% in 2014. Joining us now with more, Bloomberg Tech's Nico Grant, who wrote a great piece out this week. So we talk a lot about women in tech. I talk a lot about women in tech. We haven't talked as much about the representations of blacks and Latinx employees across Silicon Valley, and the numbers are downright dismal. Set the lay of the land for us. What does Silicon Valley look like when it comes to black workers?
Right. So, I mean, you brought up a good point with that framing that we think a lot about women in tech, and it's obviously a very important issue. Women are underrepresented, and, you know, we don't mean to suggest that, you know, women are getting the shine, because we have seen some measures of progress over the last few years, and other groups are not. But something that we've seen with black employees is that at major tech firms, the percentage of black employees in technical roles, our engineers, product managers, you know, it has risen less than 1 percentage point. So we're now at about 3.1%. It had been 2.5% in 2014, and that was when, under social pressure, tech companies started releasing these figures, because Jesse Jackson and others said, you know, it's time, and we need to know what it actually looks like.
3% of workers at Facebook are black, 2% of workers at Google are black. You know, are we seeing any progress? Slack, for example, 5% black. Still not great, but it's better than the others.
Right. No, I mean, I think it is true that there has been progress, and even some who are very, you know, staunch critics of these tech companies notice that, yes, the numbers have gone up a bit. I think the question is the pace, if it's going up enough. And when you talk about, you know, black diversity in the tech industry, it's not just a question of recruiting. It's also a question of retention. Because, you know, something that I found in my reporting was that even though these tech companies have a litany of programs and policies in order to increase the number of black hires, and that includes working with nonprofits, working with schools, offering training programs in some cases, you know, they still are not always retaining the workers that they have. And that speaks to a broader question of culture.
You talk about the feelings of loneliness, and actually one of the things that you point out in your story, which is very interesting, is that peer reviews are very popular in Silicon Valley, but if you don't have peers, or you don't have that connection with other employees, you might not get as good of a review, because you're not buddying up with someone to say, hey, you scratch my back, I'll scratch yours. Right, and that was something that was really interesting to me too. In this context, it came up at Facebook with an employee there. And these peer reviews, exactly, if you have close relationships with people on your team or on adjacent teams you work with, then people exchange good reviews. And if you don't have that situation, then people sometimes leave anonymous reviews for you. They may not be as cheerful. You know, one employee I spoke with said that he doesn't always reach out for help on certain projects that require help there, because he feels like there is, you know, sort of a wall up around him in some sense, that he's isolated from the rest of his team, that because he can't connect on that ethnic line, he's having challenges. This problem not going away. I'm so glad that you are reporting on it. You also mentioned some diversity fatigue at the end. Another problem we're going to continue to discuss. Nico Grant, Bloomberg Tech, thanks so much. Coming up, we're going to be talking to a former Facebook executive turned whistleblower. That's next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Facebook CEO Mark Zuckerberg has appeared before both U.S. and European lawmakers to defend his company's role in the Cambridge Analytica data scandal. Now the EU's parliament wants the other face of Facebook to appear before them. COO Sheryl Sandberg is one of the list of officials invited to attend a July 2nd hearing looking at Facebook's commitments and how to avoid such situations in the future. So while we don't know if Sandberg will accept their invitation, there is one former Facebook executive who has already talked to European officials about how this could have been avoided. And he wants to keep holding the social media giant accountable for its actions. That would be Sandy Parakilis, an operations manager at Facebook, a former operations manager at Facebook, who is now the chief strategy officer for the Center for Humane Technology, an organization seeking more ethical technologies. Also with us here in the studio, Sarah Fryer, who of course covers Facebook for us. So Sandy, thank you so much for joining us. You're just back from Brussels. You have said this is a disaster. There are many thousands of Facebook employees who aren't saying anything. What has compelled you to speak out?
So what compelled me to speak out is I'm seeing the tremendous amount of harm that's being done around the world as a result of some of these business practices.
Like what?
Things like the impact on elections, not just in the US, but also Brexit. Things like some of the violence that's taken place in Myanmar and Sri Lanka and other places. And so it was seeing that drove me to want to come forward and to call out some of the business practices that I think led to this situation.
Now, you were a platform operations manager, in part responsible for policing data breaches, so that gives you some sort of unique insight into policies and how Facebook approached these things. At the time, what kinds of things did you see that troubled you?
Yeah, so I was at the company, or I left the company 6 years ago, so it's been some time. What troubled me was the general approach. It was a general approach where they didn't proactively try to uncover some of these problems. And I think with respect to Cambridge Analytica, we saw that approach in terms of the fact that they knew that Cambridge Analytica had accessed a tremendous amount of data in late 2015, but they took the company's word for it that they had actually deleted the data. They didn't take all the steps that they could have taken to prevent what ultimately led to the use of that data in a number of elections.
You've also indicated that Facebook and employees at Facebook sort of avoided asking too many questions about what was happening with the data, right?
Yeah, I think there was a general culture in the company of not wanting to, again, proactively dig in and understand what third parties were doing.
Do you think the company is changing? I mean, CTO Mike Schroepfer a couple weeks ago said that he feels like the company is now thinking cynically about how their platform might be abused. Do you believe that? Do you think that the fundamental culture of Facebook can change and that they can fix this?
So I think the culture is beginning to change, and some of the steps they have taken are good first steps. The problem is that we're continuing to see that new issues are coming out that they have not been transparent about. And so they seem to have a very defensive attitude. Rather than coming forward and saying, hey, there's a number of things that have gone wrong. Here are all the things that have gone wrong, and we want to be truly transparent moving forward to ensure this doesn't happen. That doesn't seem to be the approach.
So let's talk about some of these new things, which, revelations that Facebook shared data on users and their friends with phone makers, and not just any phone maker, also Chinese consumer device makers, some of which have been flagged by the U.S. government for national security concerns. You have some insight into how these deals were done, and that this was flagged internally as a security issue, right?
So I don't have any insight into how the deals were done. I believe it was flagged internally. I think the important thing to understand is that what this really is about is it's about a lack of trust in Facebook, and it's about a lack of transparency with regulators. The consent decree that Facebook signed with the Federal Trade Commission specifically called out the kinds of things that happened in this particular deal, and Facebook also said that they were not going to be sharing friend data anymore starting in 2014, and then they repeated that again in their testimony to Congress a couple months ago. And now we're seeing that, in fact, in some cases, that was not true. And I think that's really concerning, that even after Cambridge Analytica, there was still stuff going on that they had said that they weren't doing that was, in fact, happening.
Take a listen to Mark Zuckerberg defending him, apologizing, and also defending himself before U.S. Congress. Take a listen.
I'm the first to admit that we didn't take a broad enough view of what our responsibilities were. But I also think it's important to keep in mind that there are billions of people who love the services that we're building because they're getting real value in being able to connect and build relationships on a day-to-day basis. And that's something that I'm really proud of our company for doing, and I know that we're going to keep on doing that.
That's him on a conference call, actually speaking with reporters ahead of that testimony. Do you think Mark Zuckerberg should still have his job?
I think there needs to be a serious conversation about the leadership of Facebook and whether they are being truly candid and transparent with regulators.
So do you think that he's the right person to lead Facebook?
I think it's clear that there have been a number of very large mistakes made, and I think that we need the leadership of that company to understand the damage that they're doing and take a different approach.
So let's talk about Cheryl, who's just been invited to Europe, the other leader. I mean, what do you think her responsibility or her culpability is here?
Well, I think they share responsibility in the sense that the two of them work very closely together, and she has done a lot of what would be the CEO functions at another company. They really share that role to some extent, and so I think they share responsibility for what's happened.
Have you gotten a lot of employees coming out of the woodwork to talk to you about how they feel in the wake of this crisis? What can you tell us about, you're one of the few public former employees. There are more now, but still not that many. What can you tell us about what you're hearing from the people who still haven't come out of the woodwork?
So I know that there are concerns inside the company, and I know that many people who are early Facebook employees who are no longer there have significant concerns, and a number of those folks have been talking publicly. I think the key thing to understand is that it's very difficult to be an employee at one of these companies and to speak out against practices at the company, and I hope that culture is starting to change. For example, with what happened with Project Maven and Google, is that the employees rose up and they demanded that Google not work with the Defense Department, and ultimately Google did change some of their policies. So my hope is that employees will become more engaged, take ownership, and push back against some of the decisions that they find problematic.
So Zuckerberg has said they're going to great lengths to prevent future election meddling, to clamp down on fake news. Isn't it enough? Can they prevent it?
They've taken some really important first steps, but they're only first steps. And I think you still have this credibility problem, which is that they haven't been fully transparent with regulators. And when you're talking about elections, that's something that regulators and lawmakers care a tremendous amount about, as do we all.
But what's the solution?
Well, I don't think there's any one solution. I think there are a number of steps that need to be taken. I think they've taken some of those, one of which is providing transparency, but they also need to address the fact that transparency with respect to ads that relate to elections, but they also need to go beyond that and ensure that people can actually understand the huge volume of these ads that are being made, and they need to be really clear about what their policies are and move in a deliberate fashion, which wasn't really represented by what happened in the Irish referendum, where they made a very sudden change just a few weeks before the election.
And you think there could be another Cambridge Analytica-sized scandal?
I believe that there is absolutely a very high probability of significant data misuse, considering the amount of data that was put out into the world.
All right, Sandy Parakilis, Chief Strategy Officer at the Center for Humane Technology. Thanks so much for joining us, as well as our very own Sarah Fryer.
Thank you.
Meantime, Facebook COO Sheryl Sandberg addressed this year's MIT graduating class. Sandberg pushed technology as a force for good that could be misused by malicious actors, and she reaffirmed Facebook's commitment to righting a series of high-profile data scandals.
When you own your mistakes, you can work harder to correct them, and even harder to prevent the next ones. That's my job now. It won't be easy, and it's not going to be fast, but we will see it through.
Coming up, exposing the lies behind what was one of Silicon Valley's hottest startups. Our conversation with the man who blew the whistle on Theranos, John Carreyrou, next. This is Bloomberg. It was supposed to be the Silicon Valley startup that would revolutionize the medical industry, saving countless lives in the process and making its investors very, very rich. With just a pinprick of blood, Theranos' technology, dubbed Edison, was heralded as a game changer, a lifesaver that would diagnose diseases requiring far more complex tests. It was supposed to perform multiple tests, but there was one problem, and it was a big one. It was all a lie. It was a secretive startup that had a peak valuation of $9 billion and was headed up by a charismatic founder and CEO, Elizabeth Holmes. But not everyone was taken by the Silicon Valley seduction machine. Pulitzer Prize-winning Wall Street Journal reporter John Carreyrou began exposing Theranos and all of its fantastical claims, and now the company's future is perhaps non-existent. The authorities are involved, and you can read all about it in his new book, Bad Blood, Secrets and Lies in a Silicon Valley Startup. John Carreyrou with us here with more. Welcome. So I remember the day that your story came out, and I'm so curious how you got that initial tip. What was the thread that you started to pull that led you there?
So Theranos came onto my radar for the first time when I read a profile of Elizabeth Holmes in the New Yorker magazine in December of 2014, and there was something odd in that story, something that struck me as odd, which was this notion that a 19-year-old college dropout with just 2 semesters of chemical engineering under her belt had dropped out of college and pioneered groundbreaking new science. You know, that's something that's possible in the realm of computers and computer software, obviously with Mark Zuckerberg, Bill Gates have done that. But in medical science, you need the formal training and you need to do years and decades of research to add value. To be fair, I probably wouldn't have done anything with that hunch if I hadn't gotten a tip about 3-4 weeks later. And it was a practicing pathologist in the Midwest who moonlighted as the author of this obscure blog called Pathology Blog. B-L-A-W-G is how he spelled it. He had read the New Yorker profile as well and was immediately dubious, wrote a skeptical blog item about it, and then was contacted by a little band of Theranos skeptics, one of whom, a guy named Richard Fuse, had been involved in patent litigation against Elizabeth Holmes and had become convinced during that litigation that Theranos was a scam. And it so happened that Fuse had just made contact with a former Theranos employee who had just left the company, who had been lab director at the company and who was alleging all manner of wrongdoing. So when I heard that there was a primary source, obviously the pathology blogger was twice removed from the information, Richard Fuse was once removed, I understood that I needed to get in touch with the primary source, and I finally did after a few weeks of trying.
And Elizabeth Holmes actually tried to prevent your story from being published and went all the way to Rupert Murdoch.
That's right. Initially, Theranos ignored my questions for about 2 months, and then when it became clear that I was not going away, they waged a very aggressive counterattack. David Boies, the company's famous attorney, came to the Journal's Midtown offices twice to try to quash the story. Some of my confidential sources were surveilled. Theranos was able to figure out who some of them were. One of them was Tyler Schultz, the grandson of former Secretary of State George Shultz, who was on the Theranos board. Tyler had to undergo an unbelievable ordeal that's detailed in the book. Theranos threatened him, put him under immense legal pressure for months before my first story was published. Amazingly, you know, he withstood all that pressure, never signed any of the documents they put to him. And in large part, thanks to him, I was able to go to press with the story.
So, given that lives were at stake, how did Elizabeth Holmes manage to dupe so many people? I mean, you also think about the employees who worked there, who must have known things weren't going right. And we're talking about investors who were very prominent people.
Right. Well,
is there malice here? What was it that you think drove her?
Based on all the reporting I've now done on this story for 3 years, including much of it for the book, it's unquestionable that there was malice and that this was premeditated.
For what? Money?
Well,
glory?
I think the way Elizabeth thought of things is she did think that eventually if she got the technology there and working, it would be not only would it make a great company, but it would be for the good of society and mankind. And so her approach all along for 12 years was the ends justify the means. And she overpromised every step of the way, and it got to a point where the promises and the reality, the gap between them was so enormous that it became a massive fraud. Now, why did employees not blow the whistle earlier? Theranos had a culture of fear, intimidation, and secrecy. Elizabeth's boyfriend was the #2 of the company, Sunny Balwani. He was the enforcer of that culture. He was constantly firing people, and it was very clear that Theranos was litigious. Elizabeth had sued early employees. She had sued Richard Fuse over a patent. It was clear that she would sue anyone who spoke up, and David Boies was the lawyer, and he's one of the most feared litigators in America.
Could or should she go to jail over this? I mean, what should the penalty be?
So the SEC charged her with fraud a couple months ago. called Theranos a massive fraud, and she agreed to pay a $500,000 penalty, to be barred from being an officer or director in a public company for 10 years, and to relinquish most of her stock and her voting control over the company. A lot of people think that that punishment was too light, that it wasn't commensurate with the magnitude of the wrongdoing.
Right, we're talking about a million tests with false results.
Right, and you know, and it could be actually worse than that. And we're talking about almost $1 billion in investor money that went poof. You know, to those people who feel that the SEC punishment was not commensurate with the wrongdoing, I say don't forget there's a second investigation, one that is a criminal investigation spearheaded by the U.S. Attorney's Office in San Francisco. That investigation has been ongoing for 2.5 years, and I'm told that it could well result in criminal indictments of Holmes and Balwani.
John Carreyrou, excellent reporting, author of a new book out, Bad Blood, Secrets and Lies in a Silicon Valley Startup. Thank you so much for joining us and for your reporting. Coming up, Brian Colangelo stepped down from one of the biggest jobs in sports thanks to a Twitter scandal, another scandal involving burner accounts. This raises the question, can you really be anonymous online? We will discuss. This is Bloomberg. Well, from catfishing to private messages that go public, the rise of social media has led to the rise of new scandals involving the use of the platforms. This week, in the middle of the NBA Finals, a new controversy came to its conclusion when Brian Colangelo stepped down as president for the Philadelphia 76ers. It was revealed that Colangelo's wife operated 4 Twitter burner accounts and used them to defend her husband's actions anonymously, or so she thought. So what do the events of this week reveal about online identities and whether people are truly anonymous on Twitter or any other platform? Teresa Payton, CEO of Fort Alice Solution, joins us now from Charlotte, North Carolina. Teresa was the first female chief information officer at the White House, overseeing IT operations for President George W. Bush and his staff. So, Teresa, this story raises so many alarm bells, you know, not to mention that this woman used confidential information to, attack people essentially on Twitter. But, what are the alarm bells that this really raises for you?
Yeah, there's several alarm bells. And first of all, for starters, it might not have even risen to any type of prominence in the news had these accounts just been critical of the players. But the accounts started to get bolder and bolder, releasing medical information, clearly insider information around trades and recruiting. And once you start doing that and talking about threatening people and really kind of upping the ante, that's when you typically get law enforcement and reporters involved to really try and figure out who's behind these accounts.
So, I mean, look, there are so many accounts online where we'll never know potentially who is behind them because they won't have high-profile investigations attached to them. But can you really be anonymous online?
It's very hard to be anonymous, and the reason being is there's a lot of different things. Even if you come up with a fake name, somebody else's photo, burner email accounts, burner phone accounts, and burner social media accounts, you leave digital tracks behind. So where you're standing in the moment that you post something, the type of device you're using, the browser of choice, all of those give digital tracks and indicators. Perhaps you connected to free Wi-Fi. That Wi-Fi account could be captured in some of the trails that you basically leave behind. An internet protocol address can tell me within a geography, a block or two. And so all of this can be used and matched with old school detective techniques, knocking on doors, looking at information to actually do link analysis and pinpoint it down to the person who is actually posting online.
There are plenty of celebrities who have made their names thanks to, a giant presence online. I mean, do you suspect that there are people out there, high-profile people, who have used, so-called burner accounts to boost their own reputation?
Yes, we are seeing burner accounts, and here's the thing. You can use burner accounts to be a force for good. You can be a CEO just trying to make sure you understand what people are saying about your brand, and as long as you're just using it to follow things and not say false things or try and pretend you're somebody you're not, that is okay. It's also used in law enforcement investigations trying to end human and child trafficking and different things like that. But on the nefarious side or the dishonest side, you do have individuals who are using social media accounts to promote themselves, to take other people down. And in many cases, we're seeing cyber criminal syndicates get very sophisticated, state-sponsored cyber criminal syndicates as well get very sophisticated in using artificial intelligence to actually create bots that manage multiple social media accounts. And one human can manage hundreds and thousands of social media accounts and posts. And we saw that as far as, like, for example, Russia, with the influence they tried to have on social media sentiment for U.S. elections, UK elections, potentially in the Catalonia separatists in Spain. And so you see these accounts being used for dishonest and then crossing that line to nefarious purposes.
Okay, so what's the solution? I mean, Twitter has made it clear that, allowing anonymity is part of what differentiates it from Facebook. And, Facebook also has its own fake account problem, but most of this is going to happen without anybody ever knowing, right? The vast majority of these accounts that are perhaps engaged in nefarious activity, as you say. What's the solution? This should definitely be a wake-up call for all business organizations, government organizations everywhere, to say, first of all, take a look at your social media policies and make sure you are crystal clear about how social media is to be used in your professional as well as your off time. And let people know if you're using fake accounts to promote yourself or to take somebody else down, that's not okay. And as consumers, be extra wary. Teresa Payton, CEO of Fort Alice Solutions. Teresa, thank you so much for joining us. Go Dubs. That does it for this edition of Bloomberg Technology from San Francisco. I'm Emily Chang. This is Bloomberg.